Things are getting intense in the stock market and we need to talk about it. I am Dr. Stock, Doctor of Education, and if you're feeling too tired, you might just be a bicycle. So there are some critical numbers and charts that we need to look at for the stock market: SPY, QQQ. I'm even going to pop up IWM. And then I also want to talk about Enphase and Tesla earnings coming out in the after hours today. Also, what about NVIDIA? What in the world is going on? And also, Microsoft really taking a step forward for shrinking the size of AI models. This is absolutely enormous. This is huge. Let me jump over to trading economics just to show you real quick. 8:30 a.m. on Wednesday, we have durable goods orders. That's going to tell us a lot about the consumer. We want to see if we come in around that 2.5% consensus or if we come in soft on that. That is one of those first indicators that we're going to get leading into GDP. The advanced estimate right now, consensus 2.5%, which is still a relatively strong number for us. Staying up above 2% is going to be good. Now, mind you, this is the advanced estimate for Q1, so we'll be watching for that. This can change wildly over time as more data comes in for GDP over the next several weeks that follow. But still, we want to see how that spend is coming in and also how it's broken down from there. So we want to see if we have a concentration on government spend, what exactly the consumer is contributing to that, because that can tell us a lot about the situation that we're in right now, if the consumer is starting to slow down or if the consumer is holding out, and how much is being propped up by all the money printing from the federal government. So we need to keep watching for that. So Thursday, 8:30 a.m., GDP, absolutely huge catalyst for the market, and you need to be watching that one. Friday, we have PCE numbers coming out, so we want to watch and see for that. So soft numbers there can be excellent catalyst for the markets. So what in the world does this have to do with the charts? Well, there's just something going on. Like when you watch these, there we go. Here we're looking at SPY, and we just bounced off of the oversold status, and then yesterday recovered a little bit. Pre-market hours going back up over 500. So over 500 would be a very good thing for us. Tesla is going to tell us a lot about what the consumer is doing in the world of autos. We know that their Q1 deliveries have been soft, and I'll talk more about those when we get to them. Now, mind you, where SPY is concerned, we also have banks to pay attention to, especially the regional banks that are going to talk to considerable economic health implications from here on out. And so honestly, I think the Fed cutting rates between now and, well, the November 5th election that we have going on, I think that we're going to see summertime and we're going to see rate cuts happening pretty quickly by that time that summer rolls around. So we're going to say near the end of Q2 and then Q3, and the bond market even is showing as much. We would pay attention to that because honestly, things could be a little bit of a roller coaster during that time, but we do want to watch out for it. So Bollinger Bands, we actually came off this lower band down here, and these are 3 standard deviations as I have it set at, not 2. So that was a really significant sell, and the RSI speaks to that. If we go to the weekly chart, we just darn near got 50 off the RSI. Let me pop this up so you can see it better. And this line that we have right here, we actually bottomed out right around 53. So we're still in bullish territory. So even though we've had some pain the past 3 weeks, this week had a nice start to it. Big tech is going to be the determinant there. And I have some other commentary I would like to give on that. So weekly chart, still bullish. Daily, hit oversold. Getting a little bit of a reprieve from that, but we have corporate earnings and GDP and PCE. Those are the 3. That's the trifecta that we have this week. If all the stars align, this market's going to rip back up. If the stars do not align and things fall apart, it can fall apart quickly. Now, mind you, check out this 20-period simple moving average. This is on the weekly chart. This is also critical to watch because that can serve as excellent support for us. Even though it broke down through our trend support that we have right here, our historic support, coming down to that 20 period, that 20 week as we're looking at it and finding that support there, I don't think that that's a coincidence. So moving over to QQQ, again, 3 standard deviations on the Bollinger Bands. That's really significant. You don't have too much. You have about 0.15% that would actually fall below that. That's just how unusual it would be to get outside of that lower Bollinger Band. So doesn't happen very often. The 200-day on the Qs is all the way down here at 396. We're not too far off of that, but I think that if we got there, that it would be a time where we would see a significant bounce unless we hit like just a period of huge economic weakness. And then also the AI plays. I think that big tech is going to play an important role in that. And what we're listening for Meta and Microsoft and Tesla name dropping further purchases from NVIDIA, for example, is going to be something that keeps this gravy train rolling a little bit longer. If they say that they've really halted their purchases, or if they slowed down, or if they stop, whatever it might happen to be, that it makes it sound as though they don't really have the same hunger for consumption for NVIDIA GPUs, for example, that could be something that really rattles the markets for us, especially where the NASDAQ 100 is involved. Moving over to IWM with the small caps, check this out. From a zoomed out view, this is the daily chart that we're looking at. We're actually in a bullish channel, and it's a really big extended bullish channel. Let me go out to the weekly chart, and we're going to reset the view here. And when we look at this, there we go. We've actually been on this bullish channel trend going all the way back to 2008. So we just came off the top of that one, and now we're selling off near that 200 week. And now we found support right around the 200 week, and that's pretty awesome for us to see that. So that 200 week serving as very solid support for us. Get a nice bounce. These are not coincidental prices. Also, when you look at the RSI, near 50. When we look at Qs, and when we go to the weekly chart for QQQ, the RSI on a weekly basis is also going to be near 50. Like, this is not accidental. This is very purposeful setup for what we have for big tech earnings and also what we have for GDP and PCE. So this week is going to determine over the next several days. We're probably going to know by Thursday which direction this market's going to go. If we drop down below 50, the market's probably going to dump a lot harder. If we pop back up above 50, the market's probably going to rally a little bit longer. So we want to be paying attention to the indices and what is happening in these ETFs that track those indices, and that's going to be a big determinant of what we see going forward. So for Enphase, they have earnings in the after hours today, currently have a double bottom, a little bit of a recovery yesterday going into the earnings, but we're still out of this ascending triangle pattern, so we're not out of the woods yet when it comes to Enphase. I'm having trouble with my mouse. I'm going to switch mice here. There we go, on the fly. Now this one's a lot more sensitive, and I'm uncoordinated. So between the two, there we go. Woo, it's going to be like a rocket. Can turn on the mouse sensitivity, but I'll let you guys have fun with this one. I'll try not to move it around too much on you. So when we look at what we have for Enphase, possible double bottom. We break that double bottom, this thing is going to sell hard, and we'll know that from the earnings in the after hours. So for this one, if the price is right on the options plays, I will take that straddle for the price. I'll go pretty far out of the money to keep my risk low in terms of that capital, because you really do get a coin flip for Enphase. I think it's going to give us some significant volatility, though. I think it's worth playing. Same thing for Tesla. When we go to Tesla, pardon me here, there we go. Connect this thing. And for Tesla, down below the descending wedge pattern that we have in the pre-market hours, sort of recovering a little bit. And what we'll see from the earnings today is whether or not all that pain has already been priced in, and we get a little bit of relieving pressure coming up off of this, putting us back under the formation, and then looking for a bullish reversal out of this, depending on what we hear coming from Elon during that earnings call in the after hours. I think this is going to be a violent movement from Tesla, regardless whether it's up or it's down. We'll see if there's further pain expected ahead. Is it worse than we were looking for? Is it going to be better than we were looking for? We're going to have to watch for what exactly comes out, but the price cuts aren't all that encouraging that we have for the vehicles themselves, and then full self-driving also getting a price cut as well. Now, mind you, I do think, and let me pop my beautiful face up there for this part of it, I do think that it is an actual power play to reduce the cost of full self-driving. I kind of wish that it was done sooner rather than trying to push for those high margins and really prop things up in the meantime. And the reason that I think it's a power play is that AI is run on significantly large sizes of data. So you actually want as much full self-driving data as possible to inform the whatever model it happens to be, the AI model, for that full self-driving. So the more people you have that are using that full self-driving, that are taking advantage of it, the better informed it is and the better that it can perform. And so getting those miles driven is going to be absolutely huge. And I think this is the right kind of push from Tesla. I wish that they had done it sooner. And those big data sets, I mean, they have significant competition coming from NVIDIA, which is going to make use of more sensors. Now, mind you, I am a fan of the LiDAR technology. I really think that it is a missing component right now. I think that Tesla has the right idea pushing the visual side of things as far as it can go, pushing that envelope, and then being able to license that out over time, I think is also going to be one of their future revenue drivers and keeps me bullish on Tesla. So moving over to NVIDIA itself, check this out. Look at this buying pressure that we got from NVIDIA in the pre-market hours. We sprungboard back up over $800 per share. Getting back up over this 50-day is going to be absolutely crucial and essential for us. So we bounced off oversold. Now we're kind of finding some way back up, some upward pressure on this, especially in the pre-market hours. And some of this is going to be the calm before the storm. Like I said, we want to hear from Meta what's going on there. And that happens on Wednesday in the after hours. And then also Microsoft and Google take place in the after hours on Thursday. So that's also going to be critical to watch those. And when you look on a weekly basis, I mean, we barely retraced on this on a weekly basis for NVIDIA. So even though it is short-term pain, we're still in bullish territory as per the RSI. So Microsoft starting to shrink down those large language models in order to, I believe the goal here is to fit it onto just the mobile technologies that we have, that we can fit such things on our person. And now, mind you, they would be light versions that wouldn't necessarily be the full scale versions where it reach out to the cloud. And this is going to be huge on bringing the consumer on board, not necessarily at the big infrastructure level that we would have from the massive institutions, but putting it in the hands and in the pockets of the consumer is going to be that next driver that we have. And Microsoft is really pushing forth in order to get that. And we had news out this morning. There we go. Microsoft, pull up the news. Microsoft rattles OpenAI with new AI model that's compatible as a GPT 3.5 while Apple is still hashing out Google's Gemini plans for iPhones. So we can see it from the big corporations. I know I'm just reading a headline from that for right now, but if you read into it, if you look at what all the different companies are doing, looking for scaled down models of those large language models, and really what we're going to do is we're going to see supersets coming out of these language models over time, that the machines are going to learn what exactly it takes to make that large language model. They're going to make it more efficient over time. And what we're going to have is, as the hardware from NVIDIA really starts to scale out, and then also you have the human side of it, which is learning how to leverage the financial aspect from AI. And so there's always that big search for which company it is that is going to really make that big innovative use out of it. And Microsoft making a push today in order to shrink it down to the mobile form factor, or to the consumer level. That consumer level move is going to be absolutely huge for us. And we know that Intel is actually trying to make that move for the consumer themselves, and they've sold off considerably. So if their foundry business can hold out, and if they can perform at the consumer level with their technology, then Intel's also going to have some very bright future, some very bright days in their future. So keeping your eyes out on the big hardware plays. NVIDIA, of course, number one. AMD, I think, is also very critical in that. And then Intel. That push to the consumer, I think, is that next big wave that we see following that institutional level buy-in for that AI. And then once we get to the hands of the consumer, that we shrink it down and make it more cost effective for the everyday person. I think that's really where we start to see the creativity come out and the use cases come out that are really going to turn into profitability, even if we're not necessarily seeing all of that boil down to efficiency as it is right now, in reducing the spend of different companies. So those are the thoughts that I have for this video, guys. Absolutely massive week for the markets. Got to keep our eyes open. Got to keep our eyes peeled. Thank you guys for watching. I really do appreciate it. If you want to see my buys and sells and hear more of what I have to say and talk with me and my community members, there's a link for the Patreon down in the description. Also down there, you'll find a link to a technical analysis trading course. Click that, sign up, and enjoy the hours of video and the live learning community that's part of that trading course as well. Thanks for watching, guys. I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.